As a shutdown of the U.S. government could stop economic releases and make for a foggy U.S. economy, and perhaps one that's even foggier, which may just make all of our jobs trickier. Fortunately, we've got Stuart Paul with us. He's Bloomberg Economist, U.S. and Canada economist. He joins us here in the studio. They will suspend all operations, that's a quote, the U.S. Bureau of Labor Statistics, and cease all active data collection activity should the federal government shut down. What does that mean for you? What does that mean for us?
Well, it makes for a lighter work schedule for me, less data to react to and less data to forecast. What's interesting is that in the absence of this federal data, all eyes are going to be on the data sets that we're not getting from the BLS. So the ADP data, for example, carries all the more importance because we're not getting it from the federal government, we're getting it from ADP. If that's the insight that we have into the labor market, if that's the data that's available to the Fed to make their decisions, we're going to need to rely on those alternative data sets. But what does it mean for me from an economic perspective? What do we know about government shutdowns more broadly? Well, for each week that the government is shut down, that typically shaves off about a 1/4 percentage point from the annualized pace of GDP growth during the quarter. So if we're shut down for 4 weeks, that shaves off a full percentage point from fourth quarter growth. There's a rebound effect in the subsequent quarter, typically. What's a little bit tricky is that this is happening right at the beginning of the fourth quarter. So if we were to have a 3-week shutdown, which is about the longest shutdown we've ever seen, we would still have plenty of time in the fourth quarter to make up those losses. And it could just end up being a wash when we finally do get data releases when everybody returns to work.
All right, so if it's a short shutdown, if it's 3 weeks, well, we're going to kind of be okay. We're just going to kind of figure our way through.
That's right. Yeah, I think that everything's going to be okay. I think that folks who are furloughed are going to go to the all-day happy hours around DuPont Circle. I think that it's going to be tense negotiations, but I do want to keep in mind that a 3-week shutdown is a pretty long shutdown. In the context of the quarter, though, it's not that big of a deal. What is a little bit tricky is that the Fed would be, in a sense, driving blind because it doesn't have the official statistics that it really prefers to use and the data that it likes to refer to for communications policy, right? It's always referring to its preferred inflation gauge, the core PCE measure. It's always referring to the unemployment rate to talk about the balance of labor supply and labor demand. If we don't have those statistics, official communications becomes difficult. But in terms of actual economic activity, in terms of actually knowing where we are within the business cycle, for example, even a 3-week shutdown is relatively brief.
Is the Bureau of Labor Statistics, the Labor Department, or Commerce, I'm thinking about the data that goes into all of the monthly jobs reports, are they at risk of losing employees, though, in a government shutdown? There is some concern that if there is a shutdown, it kind of emboldens the executive branch to maybe make more cuts, mass firings. There's certainly been some warnings along that line.
Yeah, so it's definitely possible. The Department of Labor has about 13,000 employees on its payrolls. In the event of a shutdown, that ends up getting pared back to about 3,000 employees, only one of whom, according to the Department of Labor, the Department of Labor's contingency plan, only one of those employees would remain at work in the Bureau of Labor Statistics.
Wow.
So in terms of data collection, it's going to be a major problem. We could end up seeing some pretty choppy labor surveys, especially for October if the shutdown continues through the reference week, the week containing the 12th of the month. Could be very choppy. And if we were to see, as Carol said, en masse firings, as President Trump has threatened, that would materially result in a reduction in the number of folks on government payrolls and perhaps an increase in the unemployment rate up to 4.5%.
But what about, can I just, to follow, but if we lose people at the Labor Department, I mean, in terms of the data collection, that's at risk too.
Absolutely. So it's really going to be a matter of what data collection looks like through the reference week, and as many issues as we've had with data quality and estimating nationwide aggregates from the surveys that are sent out every month, it's going to be problematic, and we're likely going to end up seeing, again, revisions that have been so frustrating.